Just when people thought they understood what was going to affect the short-term price action of Bitcoin and the broader cryptocurrency market, we should have known better. So we're going to cover open interest, the reporting, and if we can trust the data. Welcome to Crypto Tips. My name is Heidi. Today we're going to look at the truth of what exchanges like Binance, OKX, and Bybit, what they're reporting in terms of liquidations happening on their exchanges. And what information are they releasing to the public? And what information are they saving for their special interests? This is nothing new for centralized exchanges. We've known for years that a lot of them love to conduct wash trading, to fake trading volumes on their platforms as a way to entice new users to use their platform, because no one wants to be the first guy to use a new centralized exchange. So what exchanges do, sometimes they trade against their users, basically stealing money from them through things like wash trading. But so what's happening now with the most popular exchanges that offer derivatives trading, for example, longing or shorting Bitcoin by using things like leverage, which is taking out a loan of money that you don't necessarily have or can afford in order to gamble on what you think the future price of Bitcoin is. When you hear words like derivatives and centralized exchanges, you must know that all information coming from those sources is coming from a private, not public database. And as such, they can report kind of whatever data they probably the bare minimum of the data that they need to report to be regulatory compliant. They are not completely publicly auditable because these transactions are not happening on a chain. Again, this is all happening within a centralized exchange. We learned what happened with FTX and what they were doing with their user funds, and they got caught with their pants down. So what's been happening with, again, Binance, Bybit, and OKX since 2021, for 3 years now, they have altered the type of data that they are reporting. Rather than reporting the true liquidations that are happening, they're only reporting the liquidations that are happening per second, when in reality, there's probably many more occurring during that 1 second, but they're only recording or reporting one liquidation per second. So what this means is, for anyone who's thinking that they are seeing the true market volatility, the true market movements of things like liquidations, to see if these longs or shorts have truly been flushed out, we're just seeing a fuzzy image of what's really happening. So it could be that the volatility is actually much worse or not as bad as what we're thinking, and instead these exchanges, who often have partnerships with things like investment firms or liquidity providers, they might be giving them the real data so that they can have a better advantage and a more clear image of the true activities of trading happening on these exchanges. I don't think this quite qualifies as insider trading, but it is definitely giving an unfair advantage to those who have special relationships with these exchanges, if that is indeed what they're doing. And I mean, honestly, I would not put it past them, especially with centralized platforms where they have the room to be shady and cagey and work behind closed doors. They're going to take every advantage that they can and pay their friends to be reimbursed sometime in the future. Regardless of the accuracy of the data that we're talking about with open interest, the facts are still true. As long as open interest is still really high, as long as there's a large amount of people gambling with a large amount of money at very specific price points for Bitcoin that they hope to reach, those price points are very publicly available for whales to target and snipe, which is liquidity hunting. They see these price points where if they knock the price of Bitcoin to that price point, it unlocks a ocean of liquidity in terms of either longs or shorts that have gambled too much money. They cannot no longer cover their position, and they're forced to either buy or sell. And that's what really gives us some volatility. But what we're looking for is a healthy rise in Bitcoin for this bull market. In order for that to be a healthy rise, it needs to be people buying spot Bitcoin, holding, and also, of course, open interest being low, relatively low. Let me know what your thoughts are on this down below. If you've been suspicious of open interest data, if you've seen discrepancies of what you've seen in based on what's been reported of open data versus actual volatility or lack thereof of Bitcoin? Let me know in the comments. And if you want even more information about the cryptocurrency space as a whole, and specifically what Toby and I are doing with our own cryptocurrency investments, there's no better place for you to go to learningcrypto.com. Thanks so much for watching. Hit like and subscribe.